everybody's eyes get all glittery because it's sort of guaranteed money, right? Dividend-paying stocks have become quite the favorite for investors as they seek income in a very volatile market. So when you think of dividends, you get the usual suspects: Exxon, Pfizer, Chevron, P&G.
Why not? But we've got some under-the-radar names for you that are paying above-average dividends and are, yes, a little less crowded. Sounds good, doesn't it? Jeff Reeves is the editor of InvestorPlace.com. Jeff, thank you for joining us. What are you looking for in companies that provide these? What do you like about these companies in particular?
Well, the three companies we're going to talk about, I think that even though they're not household names, they have a strong history not just of paying dividends for many decades, but also of increasing them. I think that's an important thing for investors to look at.
So why haven't we heard about them, Jeff, if they've had a long, strong history of doing this?
Well, I mean, quite frankly, it's only really been recently, the last couple of years, that people have really cared about dividends. I mean, your companies like Cisco, Starbucks, they didn't pay dividends a couple of years ago. It's kind of been a function of the way things are now. Investors really want it. There's not a lot of growth. I think, it's just the world that we live in these days. So, and some of these companies, as we'll talk about, they're not exactly sexy. They're not tech stocks. They're not really a booming growth business. But, these are companies where, like utility stock, you can really serve yourself well by putting like a sleepy play in your portfolio that gives you a good 3% dividend, even if it's not a big name.
Well, let's get to them. And the first one, Be Still Our Hearts. HCP, it's a real estate investment trust for healthcare. In essence, this is housing for seniors. Again, as you say, not sexy, but they've been paying a dividend since 1984.
Yeah, and more importantly, they've been increasing their dividend annually, like I said, for 25 years. 4.5% yield. It is a real estate investment trust, which means 90% of its taxable income has to go back to shareholders. It's a mandate for big dividends. But, the other story here where I like this stock a lot is because the demographic play behind it. I mean, obviously, the baby boomers are getting older. They're going to need housing as they enter their golden years in retirement facilities and managed care. So this is a company that's in the right place at the right time. It's outperformed the market year to date. It's up about 15% in the last year. So not only do you get a nice dividend, I mean, there's a chance for some good share appreciation there, too.
Next up, Genuine Parts.
Woo!
Auto play here.
Yeah, if you look at the shield, I think a lot of people might recognize Napa in the shield of the company there. It's auto parts. Not very sexy, I know, but an unsexy story that people should know about is that I read a report about a week or two ago. The average age of an automobile on the roads right now is 11 years. So that's one of the reasons that companies like AutoZone, Advanced Auto Parts, have just been booming lately, is because people are driving older cars longer. They need parts. So Genuine Parts is there so they can play that trend, and they pay a 3.2% dividend since 1948, and they have a strong history of raising them. So I know you're not burning down the house here with carburetors and white wall tires or whatever's on cars, but 3% dividend these days, and you're in the right place for the automotive sector. I think it's a pretty good stock.
Okay, and my cheeks are blushing at this one because I'm just getting really excited. Bemis, this is, thank you. Packaging, as they call it, flexible packaging, things like bubble wrap, etc. But I love this. They've been paying a dividend since 1922. Oof.
Yeah, 90 years. And, I mean, one of the things that I like most about this company is if you look back only a decade ago, they're paying 13 cents a quarter. Now it's 25 cents a quarter. They've almost doubled their dividend in about 10 years. So that's really impressive. It's a 3% yield. And, overall, packaging isn't really one of those, like I said, it's not a super sexy thing. It's a really sleepy industry to be in. But, packaging is one of those things where it is a consumer staples play. Everything has to be in packaging. Bemis does the shrink wrap on bottled water. They do the little baggies for frozen fish sticks and packages of peas.
Now you're talking my language.
Again, it's not really it's not the stuff you sit around on the golf course with your buddies and talk about this great packaging stock that's putting peas in bags.
We'll take it. Jeff, thank you so much. Jeff always has great ideas.
He does.
Does the work for you. You can log on to our Facebook page because we're not done. Facebook.com/AfterTheBell. 2 more of Jeff's under the radar dividend names that you can play if you're so